To tariff or not to tariff? That is the question. What a week in the markets. Talk about volatility. Well, we got it this week. Rates ended the week last week at the lowest point in almost 8 months and ended this week at the highest point pretty much all year. So I certainly wouldn't call this a good week. And in a normal market, mortgage bonds, which are what rates are tied to, usually do well when the stock market is tanking like we've seen this week. But unfortunately, this is not a normal market and bonds aren't responding normally. And here's what I think is happening. First, there's this thing called a margin call. And if you haven't ever experienced one, you're missing out because it's a ball of fun for sure. But a margin call is simply a request from a brokerage for additional funds to be deposited into a margin account when the investor's account's equity falls below a required minimum, or sometimes even to cover a loan that the investor took out from the brokerage to purchase securities on margin. You've probably heard that term before. And to raise money to cover these margin calls, the investor has to sell something, or like a stock or a bond or some sort of security. And when the market has crashed upwards of 2,000 points in just a few days, they don't want to sell their stocks at a loss. So they turn to their more stable investments like their security bonds or mortgage-backed securities or bonds and or precious metals. And then they start selling them off. And there was a lot of that going on earlier this week where investors flushed the market with their treasuries and mortgage-backed bonds, and there were not enough buyers to purchase them. So they had to lower the price and that they're willing to sell these bonds for, thus pushing rates higher to entice someone to buy these bonds. All right, enough of that. And secondly, there's China. And as you might imagine, China is not very happy with us right now, and they own about $750 billion of U.S. treasuries. And there is some fear in the markets that China may start swamping the markets by selling off these treasuries and pushing rates higher as a result, which is motivating some bond investors that are holding these bonds to sell their holdings ahead of this retaliation from China, which is also creating a large supply in the market that needs to be absorbed by the market, which is also pushing rates higher. So we're ending the week right around 6.99 for our 30-year fixed for most of our borrowers with good credit, low debt ratio, and a minimum of 5% down. And we're right around 6.875% APR for our first-time buyers. And we've ticked up a little bit on our FHA and VA buyers to right around 6.5 or 6.75% APR. That's all for now, but if you need us, we're here this weekend. I'm around to help you with any buyers that you may have or even any questions. I'm certainly happy to help you with all that. Hope you have a great weekend and enjoy. Take care. Bye.